We start today's market talk. Nothing, it seems, can keep a good market down, especially when given the right stimulus. Friday restored the chair by pushing up all indices to new all-time highs and restoring the confidence in the trend. I have been talking about a melt up, and that happened. Actually, that happened last week also, and now once this week also. So, sitting on longs and buying on the dips is the only strategy which works in a bull market. And if the sentiment is good, then that along with liquidity is what drives the small and mid caps. And if you have noticed, money is shifting from performing sector to another sector where then subsequently the earnings catch up and then that sector also starts performing. Market outlook. Fed started its rate cutting cycle this week with a 50 basis point cut. Fed very nicely leaked to a well-known Wall Street reporter that a 50 basis point cut may be on the cards. Hence, at the time of FOMC meeting, the odds of 50 basis point cut were 50-50. From earlier where everybody was talking about 25 basis point cut. Hence, the US market didn't react violently to the 50 basis point cut, and the reaction was decent. And the market's up move is also regular. Now, market believes it will have the best of both worlds, a soft landing together with rapid rate cuts. A combination of economy doing well and a big rate cut is a good outcome for risky assets. Bond markets didn't react much to the Fed as the rate cut was already priced in. That is the US bond markets, while dollar weakened a bit. Flows to emerging markets had already increased in anticipation of Fed rate cuts. Soft US dollar has led to resurgence of fund flows to emerging markets. When the dollar depreciates against foreign currencies, local currency assets in global portfolios gain in dollar value, raising the risk appetite of investors focused on dollar returns. Likelihood of a rate cut by RBI has increased in second half FY25, and October cut is not likely given the food inflation risk. So RBI is slightly cautious on food inflation. Q1 FY25 GDP growth though deaccelerated to 5-quarter low of 6.7% due to low government spending, etc., much below the RBI estimates of 7.1%. But 10-year yield has already softened to 6.75 for 76, and market has already priced a 25 basis point rate cut. That is, bond market has already priced a 25 basis point rate cut. Also, the softening of GSEC yields, I'll show you later, is also due to favorable demand-supply dynamics, while government borrowing is lower. Inclusion of government bonds in JP Morgan Government Bond Index is leading to higher demand. Now, actual frenzy is in fundraising among listed companies, with more than 200 firms looking at qualified institutional placement QIPs to raise funds in a quick manner. 75 companies are already prepared to raise 1.39 lakh crore. Some of them are Axis Bank, IndusInd Bank, Union Bank, Mankind Pharma, JSW Infra, Torrent Pharma, GMR Airport, Irida, Oberoi Realty, etc. They are raising funds for growth and capital expenditure. They have found that this is the best way to raise money for whatever purpose you want. So, because the markets are very benign and there is adequate amount of liquidity in the market. Earlier, what used to happen was that if there used to be a dilution of equity, the stocks used to correct. Now, whether promoter buys or promoter sells, the stock still keeps going up. SC dismissed the curative petitions of telecom operators led by Vodafone Idea and Bharti Airtel, seeking correction of computational errors related to pending AGR dues. Net result was Vodafone went below rupees 10, Bharti went up because expectations are that now they will take other two telecom operators will take the market share. It will delay the Vodafone's debt funding plan. They want to raise some debt, but I think that would get delayed, hinder their capex execution, and lead to market share loss. Uh, Also, now they would have to put in some equity, so there would be another big risk of equity dilution with Vodafone also. What I'm trying to say is, one of the promoters will have to put in more equity. Three big IPOs likely to come to the market shortly. One is a very big IPO of hotel chain Leela Palaces, Swiggy, and Anand Rathi Financial Services, the brokerage arm of Anand Rathi. Now, this is the weekly data. So, if you see Nifty, Bank Nifty were up. Bank Nifty was the leader, 3.57%. Gold, silver, etc. went up because the dollar was weakening. Crude oil and natural gas went up because of seasonal issues and slight amount of tensions in the Middle East. And they had corrected also too much. Dollar declined. USD INR strengthened. And India's 10-year bond yield slightly declined. NSE market cap was up. Market-wide position limits was also up. So that means people are now we are getting into expiry week, so people have taken positions. Dow Jones, Nasdaq, S&P 500 all were up around 1.5%. So the best performing index over the last few days was the Bank Nifty in India. Now talking about US, if you see after the announcement, the bond yields which had declined bounced back a bit, but this is just a technical issue. The trend is downwards after the upward trend is now over. Now the trend is downwards, and they will, as the more clarity will come, they will decline further as they will start pricing in higher higher amount of rate cuts. Dollar index, as I brought out, is stuck in this zone, and here it is bouncing from here, but it will break this somehow, and then once this 100 odd level breaks, then it will go quickly to around 95. So this is the level to be watched, but this will drive all the fund flows to emerging markets and fund flows to gold, metals, everything. Dollar yen bounced back from 140 level because the Japanese central bank held the rates, and the US central bank had cut the rates, so it bounced back. So till right now it is okay, but I don't think it's a problem because the yen carry trade is over. Though that upward trend of dollar yen is now over. Now it is in a declining trend. Brent crude bounced back because I think it was slightly oversold below 200 EMA. So this is more like a technical bounce, and this is generally the 70 odd is the support level. Beyond that, it is unviable to sell fuel or petrol, diesel. But the trend is down, so there is no demand as such, and China is expected to be weaker, so there is no demand is expected irrespective of whatever happens in Middle East. Gold is climbing, as I had told. It is now made a fresh high last week to $2620 and is expected to keep moving up now because of movement to safe currency, a safe asset, and other issues. Copper bounced back, but it is not out of the woods. It just had a technical bounce above 50 EMA, but it is still below, and there is a big gap here. So let's see if it gets filled. But right now it is not looking very strong as such. Nasdaq was up, but it is still to reach that all-time high. It is also related to that yen carry trade, because earlier what people were doing was borrowing in yen and investing in US big tech stocks. That was the easiest trade because the yen always depreciated only. But now, since that is not taking place, so this trade is now overdone. Now the other aspects of US economy are doing well. So If you see Dow Jones, it made a fresh all-time high, went above 42,000. Uh, and what is happening in the US is market participants are happy with Fed's willingness to be aggressive in terms of monetary policy and are extremely confident of soft landing. So, if you see the long term trend was up, but a fresh upward trend has now started with Dow Jones. So, there is a greater momentum now, and it is on a weekly charts also. Now it is much above the 20 EMA also. So it has got a lot of good momentum, and it has taken support from this the basic trend line support, and now it's making a higher trend line. So this will keep going up now. India VIX declined and came down to around 12 level, but now it is at this level. So it is not going up very quickly because most of the event risk is over. Next event risk will come in November now with the US elections. Uh, Indian government bond yields are also declining, as I brought out. It's already below the 200 EMA. It is already from this levels. It has come down around 25 basis point. From 7 odd level, it has come to 6.75. That should be the level at which it should hold now, because they are pricing in a 25 basis point cut. In case there is some indication from RBI, then it will likely to go down further. Now, Nifty and Bank Nifty both made fresh highs, uh, basically due to some kind of a short squeeze and some kind of incremental buying last week. Now, if you see here for Nifty, this was a very strong bullish candle last week, and it shows strength, and it made a fresh all-time high. If you see the daily charts, uh, the the action is there is one big green candle. It goes to from 25,000. It went to 25,500 level. Then it consolidated for 5 days, and then next big green candle has taken it from 25,500 to 30 nearly 30,000 level. 25,800 it has reached. So 30,000. Oh, sorry, 26,000, not 30. 26,000 is now within reach, and this is what is the trend right now, and it is not going down. Now, if you extend this from the last rise, this rally, the easiest target would be around 26 to 50 odd. So once 26,000 is taken out, the next target would be this 26,100, 26,200, 250 levels. High volumes are driving this thing, and it's in a good uptrend. Now coming to Nifty Bank, it made a fresh all-time high. It was the laggard, but it has taken support at 20 EMA. In the last 2 weeks, we've had two strong green candles. So this was that last week was that bullish engulfing candle, and then there was a follow-up. So this is showing good relative strength versus Nifty. And if you see Nifty Bank, it has made a kind of a rounding bottom, and now it is breaking out from its last high. So nothing can stop it from moving higher because there is a relative strength here. RSI is also around 74, so that is strong. Now, if you extend this Nifty Bank, this is the hourly chart from the low it made on 9th September. The easiest target, it's already achieved 54,000, would be around 54,920 and 55,500. So that should be a normal extension. And so just ride the rally. What is likely to happen is that in the last week, now we are getting into a expiry week, and if there is some more momentum, there would be a big short squeeze next week. Now, market-wide position limit is high, so that means there are a lot of positions, and people are still waiting. Uh, and as I had brought out, futures of Nifty and Bank Nifty are at discount. So what is happening is that though the next month futures are still at premium, but there is if the next month futures are also start declining, then nobody will carry forward their position, so they will try to square off. uh, so the cost of carry will not be positive. So if people start squaring off their positions, hence that will lead to a short squeeze or a or a rally over the next week. So it may force the bears or the people who are short to cover their shorts. Bond yields we have covered. So short-term outlook is positive. Uh, and about the discount, Nifty is at 23-point discount, that is futures, and Bank Nifty is at 242-point discount, that is the futures. Now the rally in Nifty Bank, it was basically led by HDFC Bank. It made a kind of a base here around the 50 EMA on the daily chart and has now crossed this gap. Now once this gap is crossed, it will head to the 1800 level, which was that last high, and these gaps are taken out. So once this is clear from here, this is heading higher. RSI is also showing momentum. So write this right now. The one which is weaker is Reliance. It is still below the 20 EMA, though it has come up from the lower levels, but it requires another momentum to take it past 3000 levels. So I think that should come with this clear date for bonus. Now the stock which made a fresh all-time high and has been in great momentum with high volumes here, if you see, is BSC. I was talking about it initially. It is also because basically the momentum is coming because people are expecting a big gains in BSC with one expiry per week or whatever changes SEBI brings about. So that is why this stock is going up on sustained buying. PSU Bank Index, Nifty PSU Bank Index remains weak despite a strong week for Nifty and Nifty Bank. This one, Nifty PSU Bank was down minus 1.3%, and it is at similar levels to what it was in the month of January right now. So after the high it made in June, it has been constantly correcting. So better to be careful with this right now. Midcap index, again, similarly, it is now on a higher trajectory. Last week it made a fresh high, but it had a kind of this thing weak or that kind of momentum which is there in Nifty Bank was not there, but that will come because first the major indices move and then followed by later. Similarly with Nifty small cap, it declined around 0.89% last week, but it made a fresh high, and the momentum will come. Some sector rotation or something will happen, but this will also return back as the market stabilizes now. Now I'll cover three stocks. First is Mazagon Dock Shipbuilders. Why I'm covering is because there is a lot of low nervousness with defense stocks right now, especially defense PSUs, and they are selling off. So I just wanted to be clear, because if you are not sure about the fundamentals, you will not be able to hold the stock, because then it becomes more like a trading play. Now, indigenization and technological advancement in defense sector is gaining steady momentum, which is evident from surge in the share of domestic procurement to 75% in FY24 from 54% in FY19. Strong order pipeline, highly supportive policies, and thrust on domestic production. Defense PSUs and their component suppliers are set to deliver good returns. Now, with its Navratna status, the company enjoys increased autonomy in capex plans and JVs. Company is focused on strategic capital allocation for growth and infrastructure development. Order book is at 40,400 crore as of first quarter FY25, up from 39,100 as on first quarter FY24. In first quarter FY25, it bagged order of rupees 2,500 crore and also bagged a 4,600 crore contract for undersea pipeline from ONGC. It plans to incur 4,000 to 5,000 crore capex over the next 4-5 years. which will enable it to handle significantly larger vessels and nearly double its capacity. Given the delivery timeline from 2017 to 22, where for all the other submarines, because they had delivered the first Scorpion submarine in 2017, hence it will be due for refit in 2025. Company anticipates a sequential refit schedule for each submarine every 12 to 18 months from here. So that will give them incremental earnings. It delivered three destroyers, while it is set to deliver the fourth one in third quarter FY25 ahead of February 25 schedule. A frigate is also set for early delivery in third quarter FY25, which should boost profitability. Production of second, third, and fourth frigates is on track with plans to deliver before schedule. Company is on track to secure orders for three more Scorpion submarines and is actively pursuing a contract with TKMS Germany for six lithium-ion battery-equipped submarines. Further, it expects new orders for 8 P-17 Bravo destroyers. It expects to achieve 20 to 25% revenue growth in FY25 with similar kind of margins for existing projects barring any unforeseen liabilities. Company is targeting three significant deliveries in FY25, including destroyer, frigate, and submarine, one each. So now just remember here, the order book is 40,000 crore. Now, if you see here, this year the revenue is around 9,466 crores. So, if FY26 also, if they do decent growth, 20-25%, still the revenues would be 16,000 crore. That means at 40,000 crore order book, they have a revenue visibility of 2 to 3 years very clearly. And the order book may increase from here. So first point is that. The second point which has to be checked is execution. EBITDA margins are improving, so they are gaining more in terms of profits, because with higher same revenue, if you have higher margins, your profit grows. So the PAT margin is also growing up. Now, last year the EPS was around 96. It is expected to nearly double in FY26 to 183. And ROE is also now in that 30 odd percent range, 35 to 33.8, which is expected. So it is, the delivery part has to be observed and how much are they able to execute. So let's see their chart. After the June results and once the government formation was done, suddenly it went on steroids, and from around 2,500 level, it went and made a high of around 5,750. And that was actually too much. From there, it has been correcting, making lower highs and lower lows. It has taken support, if you see here, at 100 EM, at around 4,650 odd. So there it took support. It tested that 4,000 level. Some buying has come, so you can see on Friday. Let's see what happens here. If it can go above the 20 and 50 EMA, which would be the first resistance around 4,400 levels, and then go above this declining trend line, so that will change the trend of decline in the prices. Hence, this is a good stock, because we have seen FY26 likely EPS is around 180 FY26. So at 20-25 times, it can easily trade at 4,400, which is the present price. So if you give it slightly more, it can go higher. So right now, this is one stock you can hold. Next stock is Adani Green Energy. I am covering this for one reason only, because it always seems to be expensive stock. Hence, I'm covering this because to understand what is the actual valuation of this company. What happened recently was it announced securing letter of intent issued supply of 5 gigawatt hour of solar power to MSEDCL, that is Maharashtra State Electricity Distribution Company, at a price of rupees 2.7 kilowatt hour under the competitive bidding process. Now, this includes 1.5 gigawatt hour of net thermal power supply won by group company Adani Power, which made the combined bid. So one has to understand that nowadays these are making the combined bids for solar hours and non-solar hours. It will sign a 25-year PPA, that is power purchase agreement, expected in 6 months, and supplies will be from Khavda assets with staggered project development over 3 years. Khavda with 30 gigawatt would enjoy significant economies of scale. They are creating a solar park, energy park at Khavda of 30 gigawatt. Its secured PPA capacity is now 26 gigawatt, and a flat rate of 2.7 kilowatt per hour is also attractive, which is 50% of 50 gigawatt planned by the company by FY 29-30. Now it has an existing PPA capacity, power purchase agreement capacity of 20.8 gigawatt, out of which 10.7 gigawatt hour is operational and 10.1 is for projects under construction. It has recently made a 50-50 JV agreement with Total involving 1.15 gigawatt of operational and under construction assets. That means they have got money from Total. So both PPAs and merchant SPV named RE64L, wherein the latter would invest USD 444 million. So they are getting money and Total has bought some stake in the project. So that is also positive. Now let's see their earnings. Now if you see here, this is in millions. So they are doing around 14,400 crores of revenue in FY25, with a revenue growth over FY24 around 56%, which is going to be around 30% from there. So this is what is the trend. EBITDA growth is around 70% for FY25 and then 30 plus subsequently. EBIT growth is pretty high and then it will continue. PAT growth 179% over FY24 and then it will continue to be plus 50% over the next 2 years. So diluted EPS, FY25 is 17 rupees, 17.8. It will expected to be around 42 in FY27 and 28 in FY26. Our margins are pretty high and improving, EBITDA margins. So remember this, because the main concern I'll show you subsequently of this company is debt. Now, EBITDA margin, if it is 87.8% and even if their debt is at 10-12%, this is good because then they can service their debt very easily. So this is the one which is to be watched, the EBITDA margins, which are pretty high and expected to go up. Now, this is their balance sheet. The problem with this company is debt. Now, if you see here, they have a debt of approximately for FY26 because they are executing more capex is expected to be around 1 lakh 8,000 crore and going to 1.34 lakh crore over FY27. So the debt is increasing. Now, so the debt to equity is pretty high, which is normal. So the point is the ratio which has to be seen is net debt to EBITDA. What is their operating? How much is their operating cash flow to service this debt? ROC is improving. Now coming to their cash flow statement, if you see, they are free cash flow negative. So that is the problem. And the ratio of free cash flow to no plat is net operating profit less adjusted taxes. So free cash flow, FCFF is free cash flow to the firm. It is negative. So the major point concern should be only the amount of debt they have. But if their operating profits are good and their cash flows are decent because they are doing a lot of things about raising equity, doing joint ventures, selling stakes, so they are able to manage, then then the profits should hold. So that viability is there. P is coming down. Now, if you at present valuation, the P is around 60-70 for FY26. EV EBITDA is also coming down now. This is basically because as the earnings are improving, ROA is improving, ROIC is also improving. Net working capital days are high; they are going up. So their requirement of capital goes up. So they have to take more debt, and fixed asset turnover is around zero point 0.2, which is not good. Actually, at least if you put money in an asset, it should be able to generate more revenue than the value of that asset. So that is low. But they are doing long term projects. Uh, Now, this is one of the estimates some people have done for their valuation. Now, they are for FI, considering their earnings in FY 2030, and that is the EBITDA and enterprise value and net debt at that time is expected to be around 1.5 lakh crore. So, keeping a P of 30, uh, after discounting the equity at 12% cost of equity, the stock price at the present level comes to around 25,550. So this is one of the estimates. So they are saying there could be a some 40% odd upstick from here. Now, if you see the chart of this company, uh, it has it last year December, once there was a once the government won some elections, the state elections, the stock went up from around 1,000 odd levels and went up to this 1,600 levels, and then it has been up to this 2,000 odd levels. 1,800 2,000 range it has been, and it made a high on that election day to around 2,200, but then it corrected sharply, and then it has been flat after that, but it has not gone below the 200 EMA. So, considering the future potential, and now it has been going up with high volumes over the last 4 5 days, based on I think some interest in these brokerage reports, etc., which have come. So it has reached 2,000 level. So my view is that this 1,900 1,800 should be a decent level to hold this stock, but you should buy it only in case you can hold it for long term. The good thing they are doing is that now they are able to do hybrid tenders, which is the in demand right now, where their Adani Power is able to provide the non-solar, that is thermal energy, and solar part is being provided by Adani Green. This is the basic concept, but it's a long-term holding stock, and they have bought this tender over. I think the other applicants were JSW Energy and Torrent Power also. So they are doing well. Now, the last stock today is Senco Gold. Uh, there has been a strong pickup in jewelry retail after a modest Q1, as intermediate cooling of gold prices rushed consumers to stores. Now, government reduced the duty, and everybody has bought gold in the last quarter. Now, Senco is now comfortably placed to meet or exceed its 18 to 20% annual growth guidance despite only 11% growth in Q1. It offers best brand accessibility versus peers in terms of product price and penetration in the eastern region. So it is basically eastern region based company. It leverages its multi-decadal relationship with karigars in Kolkata to offer relatively lightweight ornaments with heavy look. Now that is their USP, which is the cost is lower, but look is good. Key focus is on maintaining superior brand accessibility and generating higher footfalls, albeit at a lower ticket size versus peer. So the ticket size is average ticket size for them is around 65,000 rupees. Vis-a-vis Titan and Kalyan do around a lakh to 1.5 lakh ticket size. So their ticket size is small. That is the quantum of sale is less, but they are relying on greater footfalls and more sales. Uh, it is planning to open 62 stores over the next 3 years on a base of 159 stores, equally divided between COCO, that is company operated, company owned, and FOFO format franchise operated in franchise-owned formats. So what happens is in a franchise-owned format, the ROE of the company is higher because their cost goes down and their capital invested is less. So FOFO expansion is asset light, and company operated, company owned expansion will entail a capex working capital investment of around 800 to 1000 crore. Focus remains on replicating Eastern success in non-Eastern regions. They are trying to shift to Delhi and UP area. Preference is relatively higher for higher margin handmade jewelry in Eastern India. So, each state or each region has their own requirements. So here the requirement is for handheld jewelry, handmade jewelry in Eastern India. Hence, margins for Senco is better versus South-based jewelers like Thangamil and Kalyan. The revenue per store is relatively lower for Senco due to lower per capita consumption in Eastern India. So per wedding, Eastern India takes in 200 grams of gold versus 300 to 350 grams of wedding purchase in Southern India. So there is a regional thing. Now coming to their profit and loss, they are likely to do around 20-25% revenue growth over the next 2 years, next 2-3 years. So which should be good. That means they will do around 7,490 odd crores of revenue in FY26. EBITDA growth is higher. This year is expected to be higher because of a lot of interest now in gold. EBITDA growth, etc. Profit, PBT growth, PAT growth is also strong, 25% plus. So they are likely to do around 40 EPS. Remember this 40 mark in FY26 and 50 around 49-50 in FY27. So that means they are growing at around 20%. So 40 EPS in FY26. So which is decent. EBITDA margins are growing, EBIT margins are growing, and tax rate is the same. Now coming to their valuations, presently they are at FY26 around 30 times earnings. EV/EBITDA is improving. EV to sales are also improving only because they are going down. So that means they are becoming less expensive. ROE is improving, and they are improving their margins. So their capital requirement is going down, etc. So that is good. Now let's compare them with their peers. What is happening is Senco is trading at 50 to 55% discount at 1 year forward P compared to Titan Kalyan. Despite strong growth prospects, execution on expectation should drive re-rating. Now you must understand why Titan and Kalyan have higher valuation. The revenue growth is higher and profit after tax growth is higher over the next 3 years expected in Kalyan. That's why Kalyan is at a higher multiple, and ROE is very high about Titan because they are earnings per store is very high. So this is the reason why the Titan performs at a higher valuation. So if you see 1 year forward multiple, this is nearly Senco is at nearly half the multiple of Titan and Kalyan. So there is a lot of discount in the present valuation. Now coming to others. So if you see here, trailing P, Senco trailing P is at around 55, Thangmal is on 50, TB is at around 38, so that's why it went up. But new listed, which is again a regional player, PN Gadgil is at 70 right now. Titan and Kalyan are at nearly 100 P. So there is a discount at which it is trading. Now, again, what is the difference between rest? If you see, this is a total number of stores. So biggest one is Titan. Half of that is nearly Kalyan, and then comes Senco and others. Revenue per store. If you see, Titan and Kalyan is the highest. Because of this reason only, they trade at higher valuation. Now, static mix of Titan is pretty high. Same with Allianz. Now, studied mixes, the value of a gold goes up if it is studied with something else like diamonds, etc. So that is why the studied mix is higher for these two guys, Titan and Kalyan. The gross margins of, if you see here, they are much higher as compared to balance of Titan. Store EBITDA margins are also higher, and that's why it trades at higher valuation. Store ROC, if you see, compare 50% for Titan and 18 and this range for others. Though PN Gadgil is also good. So this is the reason. The expectations are that they will do well. Witness 25 to 28% EBITDA PAT CAGR over the next 2-3 years, with additional CAGR in stores and balance through same store growth. Hence, it's a stock to which should perform well. Now, remember, we had given a P of EPS of around 40 in FY26. So if you consider that, it can easily trade at 40 P forward P. Now, if you trade it at a 40 forward P, this is presently at around 1300 levels. That is where the high was. It can easily go to around 1600 very easily. Now, if you see here, it made a kind of a cup and handle here, then took support at the 20 EMA, rising 20 EMA, and then has gone up from there. So if you just see the depth of this cup and handle, that is around 200 points. So from here, around 1100, the 200 point has been done. Now let's see from where it goes up from here, how much it goes up from here. But this is a stock to be held for long term. Now, if you all remember, it came in IPO last year, where it was floundering at around 300, 350, where we bought. Now, from here, it has had a very good rise, and it has always never traded below the 100 EMA. So, this is a stock to be held as an investment stock on every dip. I finished. We'll take questions now.